Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-off one-week basis, there were very few places to hide in the markets, as we would see 2 out of 10 of the CBAM portfolios outperform their respective benchmarks, with returns ranging from CBAM 4 down 1.56%, down up to CBAM 2 V2 up minus 1.03%. I think the strongest performers we saw in terms of equity classes would be continuing to see that rally that we're seeing from Pictet Clean Energy as investors continue to mull those alternative clean energy solutions as OPEC has warned against short selling of crude oil in order to support the price of crude. We also did see some performance on the shorter end of the yield curve, with US high yield bonds up 0.66% on the week, as you also saw a rise in the yield curve on the back of some concerns around the potential US government treasury default, and that would see yields rising across the curve and more negatively impacting longer dated government securities, more so than the shorter duration high yield bonds. In terms of also top performers in equity classes, we did see a strong performance, 0.33% return from the S&P 500 on the one-week basis, on the back of some lower than expected jobless claims, alongside some positive surprise in terms of GDP readings for the US economy in the previous week, thereby jolting US equity markets further. In terms of detractors from performance, we continue to see the sensitivity of that Hypnosis Investment Songs Trust really to interest rates, which are rising on the back of that default risk, down about 4.78% on the back of the one-week basis. And then we saw weakening PMI and manufacturing data coming out of Europe as acting as a headwind for our Bailey Gifford European equity position, down 3.53%, alongside Columbia Threadneedle China, down 3.39% on the one-week basis as well. On a quarter-to-date basis, 2 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with a relatively risk-on sort of sentiment. Again, very few places to hide coming into this quarter, with multiple geopolitical and macroeconomic factors coming into play, and that would see CBAM 5 V2 down 35 basis points, all the way down to CBAM 1, the sort of less risky portfolio, down about 1.89%. But in terms of top performers, we continue to see that strong recordings coming out of our 3 Japanese positions, all up more than 2.6% on the quarter-to-date basis, although we did see some deterioration this week again from industrial production and retail sales from Japan, which is also reflected in that weaker quarter-to-date performance in the reading we had in the previous week. In terms of bottom performers on a quarter-to-date, we continue to see headwinds for all 3 of our China positions on the back of deterioration of economic data, increases in geopolitical risk, and also we've seen just coming into this week as well, PMI composite also undershooting expectations, but mainly driven by that manufacturing PMI data coming in contractionary territory rather, with the reading sub 50 for manufacturing PMI, despite services PMI coming out of China being expansionary and above the reading of 50. And then also this week we just saw the job opening data for the United States coming in above expectations, and that would further sort of fan fears around that Fed rate hike on their meeting on the 13th to 14th of June. And then this week, as I mentioned as well, we'll probably be looking out for our monthly performance commentary coming out towards the end of the week.